Hello, this is Wes Bridel, and this is another Kingdom Calling Economic Update video, and I'm finally on video 5 of the 5 that I'm shooting. I just shot a couple on signs of hyperinflation, so this is going to be a really important one as far as gold and silver are certainly one big solution on how to prepare yourself for that and protect yourself against that. And I'm just going to run through a bunch of bullet points. These are all updates just on what's gone on in the last 2 weeks. If you haven't seen the coming storm video, that is really what this is all built on. You can watch it for free with the link that's near this video, and it's important because it gives you an hour-and-a-half overview of what's happening in the economy, what's going to continue to happen. You can see, because we made it a year ago, many things have already happened that we talked about, but many of the big things you need to prepare for haven't happened yet, and you still have time. So really, if you haven't watched that, you really should do that soon. I'm going to jump in. Gold and silver. There are silver shortages everywhere. So British company I wasn't familiar with, Bullion Buy Post, they announced to customers they could no longer get silver. I think most of these are about 100 ounce bars. Canada's biggest mint, Scotia Makata, I'm probably pronouncing that wrong. I read more than I watch TV. They announced they were out. Perth Mint, same deal, out. PAMP, out. PAMP was approached, PAMP wasn't necessarily out. PAMP was approached by a Swiss bank to buy all of their 1 kilo bars. So King World News reported on that, and all of these mints and propositories of places to buy silver can't get a hold of silver, and yet we recently saw the price of silver drop. Well, we know there's a heavy manipulation going on there. That manipulation is a gift to you. The price is much lower than it should be. The paper market, it's easy to buy. In the real market where it's physical, now unless you're buying massive quantities, it is still easy for you to buy it. But for the people trying to buy massive quantities, and really a 100 ounce bar isn't exactly massive, but typically they're buying many of those bars. The physical supply is just dwindling. The price is going to have to shoot up dramatically in order to find sellers of these bars or coins or whatever it might be. There's rumors of end users, which are the manufacturers, having trouble getting silver. So King World News has reported quite well on this topic. Hong Kong ran out of gold for a couple weeks reportedly recently. It's first story we've heard about that in gold, but it's an interesting thing to watch. Tunisia and Egyptian presidents tried to escape with massive quantities of gold. So they know what money is, and they're trying to get it out. So it's interesting to see that. Physical demand of gold in China is skyrocketing, and so they used to export gold and silver. Now they're importers, and they're hungry for it, and it's absolutely driving the world market. And let's see, I'm going to move down. I've got a couple more Chinese stories down here. China is buying an interesting trick because China just can't get a hold of as much physical gold as they want. They figured out a trick where they can buy GLD, the ETF, and then stand for delivery. And it's a way around the system to get their hands on the physical. It could drive GLD under. I would warn you against owning GLD. But it's also, again, all of these factors are just going to drive the price of gold up. One thing I read about is that traditionally Chinese have given gifts of envelopes of, I think they're red envelopes filled with money. Instead, they've been giving gold. So just a huge shift. They understand gold is money. We still don't understand that yet. Let's see, silver backwardization goes 5 years out. So the cost of silver, if you want to buy silver today, it costs more than it does if you want to buy silver 5 years from now on the COMEX. That's unbelievable. And the further out you go, the lower the number goes. The reason is people don't believe they'll actually get it that far out. Typically, the price should be higher because it's further in the distance, but that's not the case. The reason is the paper market is getting manipulated down. The physical market, though, is a real market. If I buy physical silver, you have to give me an actual coin or bar, and in this case on the COMEX bars, and those are hard to come by, so the price is high. Again, this is an indicator prices are going much higher. Adrian Douglas did some interesting research. He said that looked at open interest shrinking as the price has gone up. So you would think as price goes up, that the open interest would increase, because there should be more and more people willing to sell at higher prices. Instead, there's less and less, which is a huge indicator that the price, this is very bullish, prices are going to go much, much higher. The U.S. Mint sold 6.4 million Silver Eagles in January. This is 20% of the annual U.S. production of silver. They sold in 1 month. Now, of course, the numbers were a little fudged, because on January 3rd they had 1.7 million in sales. It's very doubtful they really had that many on that date. It's probable that it really happened in December, and they just didn't want to have this blowout 2010 number, so they moved it into 2011. But either way, the demand for silver is unbelievable. It's actually very believable if you've been watching this for a while. We've been talking about it before, but these things are finally happening. There's too many people demanding the silver there just isn't that much silver in the world. And let's see, JP Morgan Chase, this is funny. They are now accepting gold as collateral. So the company that is doing the most manipulation of the prices of gold and silver will now happily take your gold for you as collateral. I wouldn't lend them any. You might not ever give it back. So we just saw gold price decline of 6.6%. The bears are all ecstatic because the price was down. They keep thinking that there's going to be this huge crash. The reality is that was a very small decline. Over the course of this 10-year bull market, there's many declines. There always are in a bull market. The average is 12.8%, so 6.6% was really small. But again, the physical demand is so great. It's healthy to have these big falls, and we should really expect it. In the middle of the 1970s, the price fell by 50%. If you got scared out and sold, you missed the big run at the end of the 70s, early 1980. So those falls are good and important and healthy, and they help the market to shake out the weak hands and continue to launch higher. The problem is there's so much physical demand compared to the supply that there's just not a lot of room for the price to fall very much. So don't be shocked if that does happen. It's healthy and good if it does happen. Until the fundamentals change, the massive debt problems and printing problems, the price isn't going down in a permanent sort of way. But it is natural for the market to inhale and exhale. What's amazing is we only saw a 6.6% decrease so far. So who knows, it could start dropping again tomorrow. But that's kind of what's going on in the gold and silver market. I hope you've enjoyed it. Again, if you haven't seen the Coming Storm video, I highly recommend you go watch that for free. If you have any questions or anything, feel free to pop me an email. I'd love to talk to you. Thanks, and God bless you.